Welcome back. You're tuned in to Chartbusters here on CNBC-TV18. Well, we've been telling you that the markets have been doing well. A couple of stocks, maybe not very good for your health, but good for your portfolio. Just pull up ITC. The intraday chart should come up for you. The stock is at around 217 rupees odd. Let's see whether or not the time has come for the stock to move higher. In fact, break out of this range that it's been in. So that one should come up for you in the screen. And the other one we're looking at is United Spirits, a little early in the week. But I have to, highlight the stock price movement. Volumes picking up out there. And that stock is spiking up as we speak. But the other one that's doing very well today is Zee Entertainment. That's surging in trade out for shareholders. They have demanded the resignation of 3 directors, including its MD and CEO, Mr. Punit Goenka. Managalam's gone up to the big wall to tell us more about that. Managalam.
That's correct. So the Zee stock is up and about in trade today as its largest shareholder, Oppenheimer, through its entities, Invesco Developing Markets Fund as well as OFI Global China Fund, LLC, has asked for the removal of 3 directors of the company. Those 3 directors, Manish Chokhani as well as Mr. Kurian, at the same time the MD and CEO Punit Goenka. The reason why it does that, its largest shareholder, Oppenheimer, through its funds, holds about 17.8% stake in Zee. That's nearly 4 times of the promoter holding of 3.9%. In fact, 2 of the 3 directors it sought removal of, Manish Chokhani as well as Ashok Kurian, they've tendered in their resignation already. The timing of this letter is extremely important as it's ahead of Zee's annual general meeting today. In fact, Invesco has sought AGM for the recasting of, they've sought an extraordinary general meeting for the recasting of the board itself. Remember, Yes Bank had earlier called for a recast of the board of Dish TV. IIAS, the investor shareholder activist group, has also asked shareholders not to vote for reappointing Ashok Kurian as well as Manish Chokhani on the company's board. In fact, IIS was concerned that the company has reclassified Kurian as a non-promoter. Kurian had founded the company and they've reclassified them as a non-promoter without regulatory filings or shareholder approvals. As a member of the audit committee in FY20, IIS also holds Kurian accountable for the losses on account of related party transactions and governance concerns. They also oppose the 46% rise in remuneration to Punit Goenka. The reason why the stock is higher in today's trading session is because brokerages, investors, all of them see this as an overhang lifting on the stock and possible re-rating for a company which does enjoy a fair amount of strength in the marketplace. The key things to watch out for now is, will there be a new leadership if Punit Goenka resigns? The bigger question, will Punit Goenka resign himself or not? And secondly, what happens to the company's market share with the leadership change, which has slipped from about 21% earlier to just about 17%.
Interesting one, Managalam. Thanks so much for that. That explains why that stock is firing in today's trading session. But the new kid on the block, Ami Organics, well, that one's listed at a whopping 50% premium in comparison to its issue price. Sonal standing by to fill us in with all of those details. Sonal?
Absolutely, it's a good listing for Ami Organics. It listed at 910 rupees per share versus the issue price of 610 rupees per share, which is a listing premium of as much as 49%. But what happens to valuations after this? Well, it comes at an expensive value. It is trading at 62 times FY21 PE at this particular price. And if we compare it with the other players, the likes of Atul Limited, Vinati Organics, it is lower than Vinati Organics, but higher than the sector average. So the others trade at around 50 times. That is for Hikar Limited. For Atul, it is around 41 times. In terms of how the company has performed in the past few years, we'll see that from FY19 to FY21, there is a sharp jump in revenue after a flattish performance. The profitability has also increased from 23 crores to 54 crores, and that is because in FY21, company acquired 2 manufacturing facilities from Gujarat Organics for a total consideration of 93 crore rupees. The end use for the products that the company produces are the likes of cosmetics, dyes, personal care, agrochemicals, etc. They are trying to expand the product basket there. We did speak to the company a few days ago where they said that from now on they will only undertake maintenance capex, so that is the majority of cash usage that they will see, and they have been able to achieve asset turnover of 3.5 times, and they are bullish on the growth prospects, and the stock price clearly shows that.
Right, Sonal, thanks a lot for that. With that, we are wrapping up on this edition of Chartbusters. From the, or before that, we do have another listing as well, Vijaya Diagnostics. That's the one that's making its D-Street debut, albeit a tepid listing. It's up almost 9% tepid in light of the kind of listings that we've seen earlier, and Ami Organics as well, which is up almost 50% Ekta joins in with more. Ekta.
Well, yes, it is in the green at least. It's a marginal premium as compared to the rest, but nonetheless in the green for Vijaya Diagnostics. It's a South-based diagnostic company, 95% of sales from 2 states, Telangana and Andhra Pradesh, and 65% revenue from pathology and 35% from radiology. They've raised up to around 1895 crores. Now, while the anchor book was quite strong, they had anchor investors, 29 anchor investors, raising 566 odd crores. The overall subscription for this particular IPO has been subdued at around 4.54 times. Compare this with Krishna Diagnostics, which was over 60 times. Now, the IPO is a pure OFS. The promoters as well as the existing PE fund, Kedara Capital, have sold stake in this particular OFS, but the company says that they are well funded, they have zero debt on their books, and hence they do not need any kind of funds. So that's probably aiding in terms of valuations. The promoters also do not have further plans in terms of diluting stake. Q1 FY22 numbers were strong, up 1.3 times in terms of revenue, margins 46%, 15% of sales from COVID-19. Valuation wise, the stock is trading at around 46 times FY22 PE, which is a discount compared to your pure play diagnostic companies such as the likes of Dr. Lal's and Metropolis. And on FY21 trailing basis, it's at around 64 times. It's at around 69 times compared to 64 times in terms of its pre-issue price, and versus 70 times Krishna Diagnostics. So the gap really has narrowed between this company and Krishna Diagnostics on a trailing PE basis.
Thanks a lot for that. Ekta, well, Mangalam, these are the markets that we are in, right? You get a 10% premium here. You're not happy.
No, that's not good.
50%
Chahiye, sabko chahiye. That's the market. Let's see. But with that, we'll wrap up on this edition of Chartbusters. And you stay tuned to CNBC-TV18.